So you want to make $1 million trading only one strategy? You are in the right place. In this video, I'm gonna show you how you can make over $1 million using this proven trading strategy. And yes, this works for stocks, futures, and forex. The strategy is simple and easy to follow, and it has been tested and proven to be effective. I will walk you through the steps and explain everything in detail so you can start making money right away. Whenever you're a beginner or an experienced trader, this strategy is designed to help you reach your financial goals. You need to watch the whole video to learn perfectly how to execute this strategy. The last step is probably the most important one. So grab a pen and paper and get ready to learn how to make $1 million with this trading strategy. Let's get started. Okay, so let's get started with the tutorial. First of all, I want to say this is the strategy I use every single day, but I did not create it. Creator credit is down in the description, so if you want to check him out. I use this strategy every single day, and I'm going to teach you exactly how do I trade it, so you can too. First of all, this is tradingview.com. If you don't know what TradingView is, I can leave a link down in the description so you can go and check it out. It's completely free. I use the free version. There's a paid version, but I really don't use it, and there's no need for you to use it too, but if you want, there's the option. The first thing you're gonna do, down here on the right bottom corner, you're gonna select the time zone. This is really important for the process. So you're gonna select UTC -5 New York, just like I have it right here. And this is crucial because times are really important when trading this strategy. I'm gonna teach it in this chart, which is Friday's chart for the Nasdaq futures, which is what I trade every single day. You can also apply it to forex and crypto. Just remember, select volatile hours so you can trade that specific currency. Okay, the first thing we're gonna do, we start trading at 8:29. Before that, no trades, no looking at the chart. When 8:29 starts, you turn on your computer, you start looking at the charts. I just draw a line there. Then you can see the charts, you can see if a setup forms from 8:30 a.m. to 12 in the afternoon. That's one session. That's one session we're gonna trade. Then lunch hour come in. So 12 to 1, it's lunch hour. We do not trade lunch hour ever. We do not trade it. Go and have a walk, go and have lunch, go and have a cup of coffee. Just don't look at the charts because you're gonna get trapped and you wanna take a trade and the setup is not right, because setups do not transform well on lunch hours. So don't do it. Just do not trade these hours, please. I just want to say this is not financial advice by any means. From 1 p.m. to 4 a.m. to 4 p.m. it's another trading session. Yeah. So you went out, you went for a walk, you went to walk the dog. Now you are coming in and you can trade again. From 1 p.m. to 4 p.m. that's the other session. We already have our timestamps. Now let's look for the trade. This trade I took it on a live account, and it was on the second session of the day, the one from 1 p.m. to 4 p.m. And this is I'm gonna teach you exactly what you need to do. The first thing you're gonna do is you're gonna draw your lines. Of course, I'm doing this in hindsight, drawing the lines, but you can see it in the time it's happening. Right here, I'm gonna put resistance and support levels. You just see that it goes down, it retraces, goes down again, and it doesn't pass this area. So you already know there's kind of a resistance around here. So you place your line. After that, we are also seeing that we can see here a double top. So at the moment we see a double top, we put a line. Then it retraces, it touches the bottom, so it confirms our support level, goes back up and touches several times here. With 2 touches is enough. 2 touches, like it goes up, it retraces, and it goes back up one more time. That's already a bottom a level we wanna mark. So we're gonna mark this level too. We are all agreeing on this, right? Then this line is irrelevant now because we have a new resistance. This resistance was just broken and come down immediately. So we're gonna erase the line. We see that it stays on range, it stays on. What are we looking for here? We are looking for a breakout. A quick breakout with a super quick retracement back into the levels. That's the key. We looked at this level, and here it is, right here. It breaks out. Here the level, it breaks out, and it retraces quickly, very quickly. That's very important for this process. It has to retrace quickly, big, red, fat candle. That's what we want. This is a bearish setup, but there's also bullish setup. It's just the other way around. We have a big, fat, red candle. That's what we want, right? So we got that. And the second candle, it has to go down and switch the market structure. So it has to be bearish now. The market structure now has to be bearish. How do we know that? I mark it just like this. If it makes a lower low, then we know the market structure has been broken. Here we can see how there's several points that touch around this area that I'm marking right now, and it breaks it. It doesn't have to close below it. It doesn't have to close below it. It just has to break it. And here it's clear, then it breaks it. You could place maybe the line here, or you can maybe place it around here. Other people do place it here, but I like more of a confirmation. So I like it to go way down. So I'm gonna put some lines. This is one line that you can take as a market structure switch. This is another line right here, and this is another line. So any of the lines, it broke. It broke every single line in the third candle. In the second one, it broke pretty much every single one, and in the third, it broke all of them. Then, what are we looking for? I'm gonna erase these lines so we don't get confused, right? Those are mental levels. I don't even draw on my charts, but you can draw on your charts. If it helps you, that's all right. It's okay. Then we're looking for this fair value gap. I'm gonna try and explain this as simple as possible. A fair value gap is when we have a candle, we see where it starts, we see when it finishes, but we want to take in account all the range of this candle that we can see right here, this green candle, and another candle. The fair value gap is basically this. For example, I'm gonna give you an example where the value gap is not created. Right here, we have one candle, two candles, and this one goes and touches the level here. So there you can see the gap. I hope you really understand this, because this is really important for the process. This is the fair value gap. This is crucial for your learning. This is crucial for the strategy, and probably the most important part of it. You are gonna draw a rectangle here. I don't draw it anymore because I learned the strategy and I know it mentally. But I prefer that you draw it every single time that it happens. There are a lot of other fair value gaps, but we're looking only for fair value gaps when there is a breakout and an immediate retracement. Immediate retracement. We don't want no retracement, slow, 3, 4, 5, 6 candles. We want quick, we want immediate. I have back tested this a lot of times. I have months of back testing. And it's always the big red candle or the big green candle that gives the most win efficiency and the most return on investment. So yeah, we want this big red candle. We draw the rectangle in the fair value gap, and we're looking for a retracement to that rectangle because we are gonna sell there in this case. Where do we sell? We sell exactly when it touches the box. We don't sell at the top of the box. We don't sell at the middle of the box. We sell at the beginning of the box. As soon as it touches the box, you are in for a trade. I have back tested this. You have to trust me on this one. As soon as it touches the box, because there's a lot of times that you want to wait for the top of the box and you never get the trade, and you lose on a 1 to 12 risk to reward ratio trade just for you to wait. So do not wait for it to touch the top of the box at the beginning. Correct? At the beginning. You're gonna have a short position, you can place it here. Right as it touches, you are in a trade. Stop loss, very important thing, stop loss. The stop loss has to be above the previous short-term high. So right here, this candle is the highest thing we can see on the screen. Well, this one. Just above, a little above. You don't need much space. Because if it retraces back to here, we don't even want to be on the trade anymore. So you just have the stop loss there. It's a great position. If it touches, it's probably going up, to be honest. But we're not gonna trade that way. And the take profit. There are several levels where you can take profit. If you want the easy way to take profit, you don't want to sweat, you don't want to have be on the trade too long, you're gonna set your top profit in this level that I just touched below. You're gonna place it there. Then, what I do when I trade this, I take out my Fibonacci, Fib retracement. You're gonna place it on the most recent low before the drop, that is right here, and you're gonna place it on your stop loss, and there's your click. Where are we gonna set our profit targets? First profit target, when I told you, if you're trading 10 contracts, I usually take 2 of them off, right here. Then you go to the other level, the 2.618. Here you're gonna take, if you're trading 10 contracts, how much do I take? I take 3 more out. So I'm half of my position done, and it's already a 5.6 risk to reward ratio. So if you're risking $10,000, you're already making $56,000. Then you go to the next level. Here it's already an 8.18 risk to reward, and here I take 4 more. So I'm only left with 1. Most of my position is out, and then I just wait for this last target to hit. That in this case it did hit. I do have proof. I took this trade yesterday and it was a very, very good trade, and there it is. I'm out of all of my positions. That's 9.74 risk to reward ratio, and that's an amazing number. And I'm gonna tell you something. This setup forms itself every single day. I take it every single day. Not every day on Nasdaq. Maybe sometimes in the S&P, maybe sometimes in the Dow Jones, maybe sometimes in Forex, but every single day I trade this setup, at least in one currency, at least in one index, and it's simply magic. It's a gold mine. It's your own personal ATM, and you have to take advantage of it. Test it, back test it. Here's an example. If you're a scalper, I'm not a scalper, but if you like scalping, you can search for this type of setups, even if it's a weak breakout. Right here, we can see that it's breaking out this level that it previously retraced on. So it breaks out, comes back down, creates here a fair value gap. We can see it right here. Touches it, and we can see it right here. Touches it right here. I told you, not every time you're gonna reach the top of the box. You're gonna take it at the bottom. You take your position, stop loss above the previous high. And you're gonna target first of all the previous low, and there you go. Risk to reward ratio 2.83. This strategy is simply gold. It's just an ATM. This is a $1 million strategy. So take all of this in consideration. This is not financial advice. I'm not responsible if you lose. But if you do this correctly, you are not gonna lose. Be patient, do not overtrade, and wait for the right setup. That's all.